Using delta or using volume delta. So for those of you who aren't too aware of what volume delta does, I'll give you a brief run through of what it does. Now I've got a couple of different examples, perhaps my two preferred ways of using it. There's numerous others, but we've only got a certain amount of time. And so I wanted to go and have a quick look at that, and then if we have time we'll go and have a look at the distinction between two different poor highs. We've got a very clear, almost identical looking situation in the euro and the Bund at the moment, but it's very interesting that the small nuances that would perhaps lean towards the euro being one that's more likely to break compared to the Bund. We'll come on to that in a little while. Right, delta. So what does delta do to start with? What delta gives you is the difference in buyers and sellers. So you get a net number which indicates whether you are getting more buying at market or selling at market. So it's active trade rather than the argument is always, well, if someone's bought, someone's sold. Yes, that is true. But what delta's trying to show you is that transaction, is that because someone has offered something and someone has gone and bought it, which is accepting higher prices, or is a situation where someone has bid and someone has then gone and sold it to them, acceptance of lower prices. So that's the important thing with delta, that it distinguishes people's willingness to accept higher or lower prices. So it's a sign of aggression within a market or a willingness to believe in a current move. So with that in mind, that's the crux of what it's going to help you show you, and also what then leads you on to my first example, which is a delta reversal. I'm quite keen on a delta reversal. What a delta reversal helps you do is spot how you can get into a trade. So it improves your execution by giving you a point where you can get in, often much lower than what will be shown as an extreme. Let's talk this one through. So this was ISM last week, or ISM non-manufacturing to be specific. Big drop in the S&P. We got a drop of around about 30 handles on this. So very big move. This is on a 1 minute chart just here. So big drop down. And then this huge rejection candle. This is on an hourly chart, by the way. This is on a 1 minute chart. Huge rejection candle and then rally. This rally, in fact, over the last few days got us all the way back up here. What the delta reversal does is helps you get in right at the beginning of this. Obviously, to turn and get this big rejection, you need buyers to come in. You need buyers to stop that selling and then actually start to push back. And that's what you start seeing down here. After the initial move, so the initial big drop, we then drift on lower and get below 28.59. This is where you're now starting to think, okay, we've got through the previous day's lows. This move can keep on going. This move can keep pushing to the downside. What happens though is we get left this little block just here. Tight trade in a small area at the lows. This is the point where we should be progressing to the downside and you're not seeing it. Delta helps you out massively here. Throughout this block, delta sits sideways and if anything actually starts rising. So what you're getting is sideways trade where people are going to come in and sell it, use this area as a point to then try and get additional short position in. But at the same time, what the delta is showing you is that people are actually coming in and buying this. So every time someone puts an offer in to sell, someone is coming up and actually taking it and buying it. Whereas if this is going to progress to the downside, what you'd want to see is the sellers actually come in. The sellers come forward and keep on selling it. That's exactly what you got here. You look at the delta drop just here. Huge drop in delta. We dropped from plus 5,000 to minus 5,000. So 10,000 lot of net selling on this move. So 10,000 more people or more contracts have been sold into the bid than they have bought into the offer. Not the case down here. The market starts taking some of this back. That gives you now a point where you've got some belief that the buyers are in, that buyers are going to show some strength here. So as you come out of this block, we then get the reversal back, gives you your passive entry at the top of that block. Now what's helping you with this passive entry is we've just seen, particularly this candle just here, this little bump up in delta as well. One candle on its own is giving you this quite a large surge in delta. That's what you want to see. You get that big surge in delta on one candle. That is showing you that the buyers have now gone, right, we're buying this. Pushes the market up. That then gives you your passive entry here, and you've now got confidence that the buying's in. From there on, delta continues to increase until you get these two high volume candles where you get this final acceleration up, where you get this acceleration of buying. That's your sign to get out. That's also got you right the way back up towards 79, which was these previous lows. So an ideal exit point, along with a bump up in delta, increase in volume, exhaustion of the move towards the upside. So that's what I'm looking for a delta reversal type trade. To use it to try and pick your point, to get you a better entry point. If you've got in down here, come the end of that hour, if you'd stayed in, we're then closing back up above 79s. You're getting a close somewhere up here. This now looks good for a continuation of move. You get one test back and then further continuation. And this, as I said, took us all the way back for a full 100 handles to the upside. Not saying you have to take that when you get in, but it gives you a more accurate point to try and play a reversal. I do find with delta there where it's best on a shorter time frame, so using a 1 minute to help you really nail down that point of turn and how exactly you're going to get into it. Now I'm going to use a slightly different example here and looking at delta to help confirm a move, or in the first instance, delta not confirming a move. So what we get in this first instance is we've got a small range established just here. This is in the DAX. You get a breakout of range. With each little push up, little increase in delta. So not looking too bad. But you see instantly, as soon as you have each little bump up in delta, you get selling candles, and delta reverses the entirety of the move. So what that's showing you is this is perhaps short-term, either stop out of positions or someone trying to force the issue. Push, push, push as the move goes up, but then they're not getting any follow through. No one's coming in and buying it again. All the trade is then to sell it back down. And ultimately, delta doesn't change over the course of this move up. So that's a negative sign for the move. You're not seeing people progress with the buying here. You're just merely seeing people buying it in the short term and then stepping back, letting the market get sold back. Ultimately, whilst you're out of the range, this market still looks good to go up. But with delta falling, it's not that strength that you'd be looking for. And so what it does is it should diminish your confidence in that level continuing to break towards the upside. What you then get is a classic range break situation where we're in a sideways range, we trade out the range to the downside, just like that S&P one. Little block and delta starts to rise within the block. But unlike in this example when we break, delta increases for the entirety of the move up the range and continues to increase as we come out the range. So you're using delta as confirmation here. First up, as delta starts ticking up, as confirmation that you can play this back through the range and potential break of the upside trade. So you could be buying this as we come back above 12,378 with a target up towards 12,391. But once the delta's ticking up, you can stay with this. And as soon as you break out above this high, delta continues to move up. That keeps you in the trade. And it's only then once you get this bigger increase in volume, that can give you your chance to get out of the trade. Delta bumps up, and we then start to steady up at the higher areas. So that's how I'd use delta. As I said, there's many other reasons to use it, but the key thing is here, it's trying to establish that willingness of people to keep a move going. What you don't want to be doing is getting on a move that no one else believes in. Because if no one else believes in it, no one's going to keep that move going. They're not going to keep that buying going. Right, so the other thing I wanted to have a quick look at, and this is something that we're going to see develop throughout today. It's a difference in two poor highs. I talked about this with the guys on the career course this morning. And looking at the difference between the euro and the poor highs that we've got up here from 48s, 54s, 58s, and then the Bund at 69, 74 and 78. And the difference between what happens before it gets there. Both markets have a sideways range, have traded lower and then come back up. So these highs look good to break. If you break the first one, you should be expecting to break the next two as well. The difference here being what happened beforehand. With the euro, we get out of this range, we trade down into this little sideways block, and this is where if you wanted to sell, you'd be looking to sell within this box, looking for a move out of the block down towards 0960 area. That would be the trade you're looking for. You don't get that though. And instead we move out of the range to the upside. What this is doing is this is now building positions in here. New short positions, old short positions up here will have been emboldened here and be now thinking, okay, this is looking good, and may well hold on to this position, maintaining their stops higher up. But further from that, you've also now got reason to want to buy this. Very similar to that example I gave just above with the DAX trading back through the range. Comes back into the range, you've now got reason to want to buy this. So you've got buyers wanting in on this, you've got sellers who potentially are getting stopped out as the move goes up. And that's why when we get to the top, if you reach up towards those poor highs, we could well see this break come in as people finally give up on their shorts. Buyers continue to push this move higher. Delta could be very important on this. If you see delta rising as we start getting up towards those highs, that could well be your ideal situation. As it happens, and currently, just to give you a little bit more on this, delta is not rising. Delta is in fact falling at this point. So it does take a little bit away from it. And so something that would diminish the confidence that this is going to break through right at the moment. Now we contrast this and the scenario of building positions and trading back up with the Bund. Bund's taken a slightly different direction how it's done it. Similar sideways trade going into it. However, unlike the euro, the Bund doesn't have this trade down and trap positions, and even if it has in the overnight session, there's going to be very small positions, very low volume traded in the Eurex overnight session. On the move back up though, you get the move back up based on a gap down, trade back up. So what you've got to ask yourself is, who's caught short down here? Because there's no new shorts coming in here. Anyone who was short here, seen the gap down and the market's come back up. But no one's added on, no one's got themselves trapped down here. It is just merely a case of buyers have seen this as an opportunity for cheaper prices to pull the market back up into range. In doing that, you're now back into the exact same position you were before, with buyers believing that from this range we're going to go higher, sellers believing that from this range we're going to go lower. But ultimately, no one's been given any greater confirmation on this. All we had was a gap down and then a reversal higher. And that, I feel, is the difference between the two. We'll wait and see how this plays out. But at the moment, we have seen the Bund fall. We have seen the Bund, granted because of some of the comments on trade, start to actually drop down as far as double O's. But all the while, as long as you were holding below this little low down here, below the sort of 174, 36, 38 area, this was always looking that little bit weaker. Both markets still have that trade on, and both still have the scope that if you break the first high, you should break the rest. So the trade's not lost, it's just perhaps the conviction to go for the euro one is that little bit higher today than you may well be looking for in the Bund. It's something that I point out because I want people to start thinking about how this could play out. There's lessons to be learned here, particularly as we've got a direct comparison of two almost identical setups playing out on the same day. It's going to be a very easy one to go back and compare what happened previously and what then happened within the day on the two. So I'll leave you with those bits, guys. Hopefully I've given a couple of examples where people start using delta. These, like I say, are my two preferred uses for delta. One, to help you stay in a move. It confirms the move by continuing to push delta higher as the move progresses. And my more favoured is to use it for a reversal, to get you into a trade, often at a more opportune point than waiting for that larger time frame close higher. Once you've got that close higher, you've been confirmed that you're right on this trade and you've now got scope to add on. But it gives you the possibility of getting in right down towards the bottom of a rejection candle like this. That's why I like delta. That's how I use it. Look out that I'll do a fair few more debriefs with elements of using delta in it as well. So we will come on and do more of this in future. But hopefully that's given a few things to be thinking about, and particularly those poor highs in the euro and the Bund for the rest of the day.